US President Donald Trump passes an executive order to impose 50% tariff on Indian goods effective tomorrow. The Nifty opens with a gap down, giving up 24,800 as well as most sectors trade with losses. Pharma stocks the worst hit on fears of higher tariffs.
Sun Pharma is the top loser on the Nifty as Bufa Securities cuts its target to 1,570 rupees. A share on expensive valuation is what it highlights. Zydus Life also trades with cuts as Investec issues a sell rating with a target of 940 rupees a share.
Ola Electric surges as it obtains a PLI certification for its Gen 3 scooter range, making it eligible for incentives for 13 to 18% of its sales value. The stock surges 4%.
Protein Eagle secures a 1,160 crore rupees order from UIDAI as well as BLS International also wins an order worth over 2,000 crore rupees from UIDAI. Both stocks surge and trade on the back of order wins.
And Vodafone Idea slumps as the government refutes news reports that telco could receive some relief on the AGR dues. The stock now down by 10%. You're watching us here on Chartbusters. I'm Mangalam Malu. With me, Vinny Motiwala. We come to you from the CNBC-TV18 Motilal Oswal studio on a day where the markets are actually selling off. We have the Nifty sub that 24,800 mark. The sensex not doing too well, led lower by a cross section of all the sectors, right from the Nifty Bank and some of the frontline indices. So what we'll do is we'll get tracking on the markets, but meanwhile we do have Vikram Solar, one of India's largest photovoltaic module manufacturers, saw subdued debut on D Street in line with the market, minor gains to its issue price, which is still an outperformance given the market mood. But the question is, where does it go from here? Currently holding nearly 10% up from its issue price. We do have Chairman and Managing Director Gyanesh Chaudhary joining in to discuss the company's post-listing strategy. Thanks a lot, Mr. Chaudhary, for joining in. Congratulations on the listing. It's a near double-digit listing on what has been a subdued market day. So the street believes that there is growth potential. So let's put numbers to that growth potential. You know, you've earlier said that your current capacity is 4.5 gigawatts. Stated objective is to take to 7.5 gigawatts by FY27. By the end of FY26 itself, it'll be 6.5 gigawatts of capacity. So in line of that, what are the kind of revenue and EBITDA growth projections that you have for the next couple of years? If you could give us a sense.
Our revenue and EBITDA growth are well in line with our overall capacity expansion. What our numbers project is the fact that with a 15.5 gigawatt of capacity addition that we're doing overall in this current fiscal will lead to a phenomenal jump in our overall revenue, along with cell capacities coming in next year. So we are very excited about the kind of market share that we currently have, and our order books speak very loudly of it.
Right, Mr. Chaudhary, if you could give us some numbers, right? So last couple of years, you've managed to see a growth of in the range of 20 to 35%. Is that something that we'll see, 35% growth in FY26, FY27? Is that what we're anticipating? And also in terms of margins, where would that stand at? 14, 15%, is that a range we could be watching out for?
So the revenue growth will be in line with what you just said, 30 to 35%, given the additional capacity that we are looking at adding. As far as EBITDA is concerned, we will maintain the healthy EBITDA levels that we have maintained so far, given the fact that the order books are there. Next year, we look at improving the EBITDA marginally, considering that we will have our cell capacities in line.
Okay, also, if you could tell us about, in terms of your impact that comes in of what the government has imposed in terms of that domestic ALMM, right? So what does it mean for players like you? How do you stand to gain from this as well?
So the government has already imposed the ALMM List 1, which has been in play for the last couple of years. What that has done is deterred any unqualified Chinese products to be dumped into the domestic market, while domestic capacities have been able to cater to this market very effectively. As far as the ALMM list 2 is concerned, which is expected sometime middle or end of next year, this will provide a level playing field for cell manufacturers who are also module manufacturers like us for domestic content based products. So further expanding the domestic manufacturers' reach and network.
Right. If you could give us a sense on the latest technology which is available. You said the overall percentage of high quality latest technology is just 20% of your total capacity. Going forward, how much higher do you think can this be as a proportion of the overall market? And what is the marginal differential between this one and the others? Because I suppose latest technology would imply lower costs and better output, which would be an operational improvement for you, right?
Absolutely, Mangalam. The play of technology is very, very important in this sector. We started 20 years ago with a 200 watt solar panel, which is now in excess of 600 watt, which is 3x given the same form factor. So the idea is to get more bang out of your buck because you have limited area to consume and limited space to deploy the solar panels in. As far as the technology is concerned, the current front-running technology is TOPCon technology, which occupies more than 80% of the market share for us. We are primarily producing TOPCon products today, while we have in our stable NHJT, G12 and other technologies, which will going forward become more desirable. But today, given the levelized cost of energy that an IPP desires to achieve, TOPCon achieves significant improvements.
Mr. Chaudhary, if you could just highlight in terms of what is the current pricing trend that we're seeing in India? Any indication, especially for cells, modules, analytic indication that comes in there? And, some analysts have highlighted that maybe there was a bit of a supply glut that came in as well. Is that the case? If you could give us any signs on that front.
Absolutely. As far as the supply-demand situation is concerned, we've always seen, while there is a lot of capacity that could be available, but there are all different generations in terms of technologies. So while, as I said, an IPP would want the highest efficiency product so that they can put a 1 megawatt solar plant in a 3 or 3.5 acres rather than a low efficiency product which would take up 5 acres. And you can very well understand that with this additional land that is required, there is additional balance of system, so the levelized cost of energy goes up. So it's always important to use the highest efficiency product and to ensure that it penetrates the market adequately.
All right. And finally, on the movement beyond cells and modules, if you could give us a sense on what are the pricing trends for both cells, modules? Analysts are saying that there could be a bit of a supply glut, which may have an impact on your margins going forward.
So, because technology plays prime role in this, there are, if you look at the overall capacity, there is a certain utilization which is far below the nameplate capacity, and from there we come to the technology piece, which is another, 50% basis points. So as far as TOPCon capacity is concerned, there is a limited number of manufacturers who are able to achieve highest efficiency TOPCon, which is the most desirable. And Vikram is one of the prominent players in the TOPCon space, and our order book says that there's adequate demand for us. So there is in this big market, we are gunning for the big spot with the highest efficiency product. So we feel that there is always an opportunity for manufacturers like us and customers to collaborate to come up with large projects effectively.
All right, we take that point. Thank you so much for joining in. Once again, good luck on your listed market journey. We will keep speaking to you post your quarterly numbers to get a better sense on where you are on that journey that you have shared with us. 25 to 30% growth is acceptable for you, is actually possible with the margins staying at current levels. Take a short break, come back on the other side. We'll get you more on the markets and a lot of stock-specific action. Stay with us.
Welcome back to Chartbusters on CNBC-TV18. A quick check on the market, right? After that gap down start, we're seeing that the market is holding on to 24,750. About that mark is where it's managing to trade at. Advance decline ratio clearly in the favor of declines versus advances, and that is why we're seeing a sharper fall coming in the broader end of the market. So Nifty mid-cap, small-cap also clearly under pressure. Most of the sectors are trading in the red, except some bit of a respite coming in on that Nifty FMCG side. We're seeing some bit of a gainers and green for some of the names over there. But let's also welcome on board Saumil Mehta of Mirae Asset Sharekhan for a technical check on the market. Saumil, good morning. Thanks so much for joining us on the show. What are we watching out for? Now, obviously, today what we're seeing coming in is mainly as a move because the tariff announcement that was there, that 50% tariff, that comes into play, right? And we're seeing the fall coming in for the market. Now, what are the important levels on the downside that we should be keeping an eye out on for the Nifty as well as the Nifty Bank?
Hi, good morning. Good morning, Winnie. Markets have been sliding down. It has started, closing below 40 daily moving average today. And we are very close to 20 daily moving average, which is very crucial. Now, 24,700, 24,600 levels where there is a gap, those levels are extremely important, very crucial now from these levels. If it closes below these levels, let's say 24,600, then we are sliding to 200 daily exponential moving average, which is 24,260 levels. So these are some very crucial levels on the downside. However, what I feel is that markets will take support. Nifty very specifically should take support around these levels, 24,700, 24,600, and again start the bounce back towards 25,000, 25,200 levels. We may just say we may just stay around these levels, but looking positive in the short term and in the medium term outlook. So it should be more stock specific and more sector specific approach. Bank Nifty, on the other hand, has already cracked some very important levels on the downside, and I'm expecting 53,800 levels, which is the 38% retracement of the entire rally which we saw in the last 4 to 5 months since March, April levels. So I think that level, 53,800, will be very crucial and very close now. Only 600, 700 points left in Bank Nifty. So that will be a little crucial, and 100 points stop loss for Nifty. And I'll be expecting Nifty to be around 25,000 level itself.
And individual stocks, what do you have your trades on today?
I'm expecting IT, auto, these two sectors to perform well. So I have Bajaj Auto on my list. Bajaj Auto has broken out of a good consolidation and has a very huge inverted head and shoulder pattern. So I'm expecting a good rally on the upside. Stop loss would be 8630. Targets would be 9150 for Bajaj Auto. This stock can be a positional call as well. TCS is my preferred pick from the IT sector. Short-term bounce is expected. This stock has broken out of an ending diagonal pattern, and I'm expecting a good rally here. Stop loss would be 3090, and the targets would be 3300.
Okay, keeping an eye out on those stocks as well. Saumil, thanks so much for joining us as always and giving us your insight in terms of markets as well as individual stocks. But on that note, let's shift focus to a special segment where we get you all a few ideas of profit from a Money Control Pro. Sachin Pal of moneycontrol.com joins us to talk to us about the stock he's tracking closely today. Sachin?
Bias Cables company RR Cable delivered a very strong set of numbers in the first quarter of FY26, driven by a strong revenue growth of almost 13% year-on-year. The operating margins of the company also expanded by almost 170 basis points from a favorable base and reached around 7% in the quarter gone by, which resulted in the operating profits growing by almost 50% year-on-year. The top line growth of the company was primarily driven by a very strong volume growth in the core business of the company, which is the wires and big cable business. However, the company witnessed some challenges in the FMEG business, which is challenging to scale up, primarily due to the early arrival of the monsoon season, which really had a drag on the overall sales of the summer-focused products. Nonetheless, the company aspires to grow its overall portfolio by 15 to 18% on a YoY basis for the next 3 to 4 years, and has also outlined a capex of almost 1,500 crores to be able to expand its wires and cable capacity by almost 70% by the end of FY28. Overall demand environment in the power and transmission space continues to remain very strong, primarily aided by government spending in the sector. That said, the company trades at around 35 times FY26 estimated earnings, which we believe is very reasonable for accumulation from a long-term standpoint.
All right, before we slip into a short break, just keep an eye on the market. The Nifty is now down 200 points, more than twice of what it gained in yesterday's session. And actually, it is the entire gains of August series so far as well. At the low point of trade was actually at the high point is the India VIX. So as we slip into that short break, the intraday chart of the volatility index comes up for you. And we've seen a sharp gash on the frontline index, which is reflecting in the increase that we've seen in volatility as well. We'll focus on the markets and stock-specific action on the other side of this break. Welcome back. Weakness continues to the market. No two ways about it. Pull up Avenue Supermarts. That stock opened fairly higher. There was a positive note that came in from CLSA as well. And now as we speak, it's actually given up all those gains, moved into the red. And similar is the case for a lot of the other stocks as well, which were earlier holding up and now at the low point of trade. Case in point, PG Electroplast exited F&O band today, is now down about 5%. In fact, this month, the stock is down about 30%. And we have Page Industries as well. Page Industries has moved to the low point of trade after being at higher levels, mildly in the green earlier, and now has moved back into the red as well. We do have a bunch of other stocks on our radar. Vodafone Idea is case in point, at the low point of trade for that counter as well, after the Minister of State for Telecom has said that the government has done all of it can do to help Vodafone Idea, speaking to Ashmit Kumar. And he did rule out any further measures, saying nothing is in the works.
Whatever we could do, we have already converted into equity. Right now, our focus is to how to rebuild BSNL. So make the BSNL. Vodafone is up to their management. They are all business people. They know how to manage. It's up to them how they want to take it forward. From the government side, there is nothing that's being discussed at this time.
Okay, now let's move on and talk about Ola Electric. The two-wheeler EV maker has extended gains on the back of the news that came in, that PLI certification for its Gen 3 scooter portfolio. Let's go across to Sudarshan, who is joining with us to give us details on this one. Sudarshan, good morning. And Ola today surely buzzing in trade.
So in a weak session, Ola Electric is higher. It has moved higher up to 5% after the company has announced that it has secured PLI certification for its Gen 3 scooters. It had already PLI certification for Gen 2 scooters. Now, Gen 3 scooters PLI certification is important because it forms almost 56% of its total volumes. Now, this certification will allow company company will be eligible for incentives, and that would be in the range of 13 to 18% of the total sales value that company generates from the sale of the products. Now, how will this help positively? So if you remember, after Q1 earnings, company had told that from Q2 profit is going to improve, and also auto business EBITDA will turn positive in Q2, and in FY26 company is targeting auto EBITDA business of 5% or more. Now it's saying this after this PLI certification, profit in Q2 is going to move higher further. So we'll have to see how the Q2 earnings pan out. But for now, stock is up almost 4% on the back of this news.
All right, that's Ola Electric having been doing well over the last few trading sessions itself, among a bigger gainer, and then now it's got the PLI Phillip, which has taken the stock higher by about another 4%. With that, we'll wrap up on this edition of Chartbusters from me and the entire team that put this show together. Thank you so much for watching. Stay tuned. Trading Art comes up next.